Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the action today on this Thursday, July 25th, 2013. Markets are hovering just on the positive side with the S&P up just under 2 points here. The Dow is actually negative 8 points, but the Nasdaq having a solid day, up about 19 points. That's on the back of good earnings from Facebook, Qualcomm, and of course Baidu. BIDU up about 10% on the day. Facebook's having a monstrous day. Take a look at Facebook today, guys. Monster move on Facebook, up about $7. That's about 30+% on Facebook. And we're not talking about a small cap here, folks. Facebook had a market cap prior of about 60 million. So you got a market cap now of 80 billion, 60 billion to 80 billion dollars. That's a huge gain in market cap as they blew out of the water earnings expectations. All right, so again, a couple little observances here from what we're seeing today on this market as I flip to Baidu. Baidu actually opened sharply higher. Look at this topping tail on Baidu, by the way. I mean, is that amazing or what? Perfect topping tail, which is a bearish signal, and look at the stock just coming straight down from that point. Now it came right into the 20 and bounced up, but nonetheless, just a beautiful topping tail intraday right there. Again, for traders here to play on the short side for that drop. Now, again, just going back to observances, guys, on the SPY here, which is the S&P 500. Right now we're up 17 cents. What I was surprised at today, although I guess I'm not super surprised because the markets are so overbought, but the markets had very good earnings yesterday from, as I mentioned, Baidu, Facebook, and Qualcomm, and they opened lower, pushed to the positive side, sold off back to that double bottom low right here, and then have just squeaked out a little bit of a gain, even though they're coming in now. All right, so again, you would have thought yesterday after those earnings, kind of the same as the day before when Apple reported that, when Apple was surging up after hours, okay, well, this in light volume is going to give the market a boost the next day. Well, yesterday it didn't. Markets ended lower on the day. And the same thing today. Okay, well, good earnings yesterday from Facebook, Qualcomm, and Baidu. This should give the markets a push, and it didn't. It took the markets down initially, and now again you can see we're coming in pretty nicely here on super light volume. What's even more amazing, which is something I've mentioned to you guys over the past few days, is that the market has been very, very light in terms of volume, and that usually caters to the upside, but you're not seeing that right now. So you have to ask your question, okay, well, what exactly is going on here? What's the catalyst? Why in light volume can't the markets get up? Why in light volume with good earnings can't the markets push higher? And the only thing I can come to the conclusion is that this market is at a point where the only way it's going higher is if Ben Bernanke comes out and makes another positive statement. All right, really, that was the catalyst for the last 5 rallies. Okay, the Bernanke isn't going to cut back on QE, and then people thought he was again, and then, oh no, wait, he's not again, and the market surged higher. So that to me is something very intriguing to keep an eye on because I think it means everything here. I mean, how many more times can Bernanke push the markets higher? How many more times? That's what I would like to know. So these are all little key things to keep an eye on, folks, and very, very peculiar things at that I think warrant protection, conservation, being conservative, and being smart about your investments. And this is just coming from someone who's traded for decades at this point and understands how the markets work. But the markets, to me, are telling us to be careful. They're not saying they're necessarily going straight down because, again, if Bernanke comes out and says the right thing, I'm sure we can go up another 2% or so in the markets. But what I am seeing here, folks, is the market telling us to listen, be very careful. If Bernanke does anything unexpected, this market's in a potential crash scenario. And I don't mean literal crash of 20%. I'm just saying we could drop 10% in a couple weeks very, very quickly in this market to kind of come back in alignment. Okay, so again, guys, just please be aware of that. Please be very, very careful. Ask yourself the same question I just asked, which is in light volume with the earnings we've had the last couple of days, why is the market not going up? Because again, if you zoom out on the spiders here, we had a gap up and it crapped out. We had a gap up yesterday and we sold off. We had a gap down today and we were able to squeeze out a little bit of a profitable move here, and then we're coming back in right to support, granted, but nonetheless, the markets are not strong on these earnings that we've seen. So these are just things to watch and continue to monitor. And We'll take it one step at a time. Couple stocks in motion today. Google taking a hit today. Many people would say, well, how come Google's selling off so sharply today with the market flat, with Google down about 14 bucks? And the answer is very simple. Google reported earnings about a week ago, right? And Google's earnings were not the greatest, especially when it came to ad spend. Well, Facebook just reported awesome earnings on ad spend. So who's eating whose lunch here? Needless to say, Facebook is rocking it while Google's ad side is not. So I think there's a little bit of a run from money in Google. People are taking money out of Google and putting it in Facebook. That's my guess. Okay, and I think that's a pretty logical assumption here of why Google's down when Facebook's up. I mean, in a weird way, even though Google's not a social network, but Facebook is, they're both doing ads. They both make a ton of money from doing ads, and Facebook is rocking it. Needless to say, 30% move on a $60 billion company to $80 billion today is a fantastic, amazing move. Okay? So, anyways, guys, that's what we're seeing there. Google again coming back towards the lows of the day. We'll see if the market turns around and goes negative. Baidu, as I mentioned, is having a good day. Apple's down a couple dollars. I guess I'm not so surprised on Apple pulling back a little bit because it did have a big move yesterday, and this is just consolidation pullback. If by chance, and this is a good warning, if Apple ever comes down and gets below this 200 or really below this low from the gap up on earnings, that would be a very bearish sign. To me, that would be the end of Apple until it gets to about 360 bucks. All right, so what I'm saying here, folks, is that if Apple cannot hold these gains and gives it up and goes to the below the level prior to earnings, that will be a dead signal that it is going not only back to 385, which is the 52-week low, but back to 360, which is a major pivot. Okay, so there's a little heads up on that stock. Amazon reports earnings after the bell today, guys. Amazon reports earnings after the bell. The stock is trading up about $3 prior to earnings. The stock has had a monster run. In all fairness, there's no way I could make an assumption here. Yesterday, I thought Baidu was overbought going into earnings, and it had a major move up. Granted, I thought Apple was going to go up, and that was dead on. But you can just see how it's really a crapshoot when you're playing with earnings. That's why I don't trade them per se. Now, after earnings come out, I might day trade them. But there's a 3-day rule around earnings saying that once they release earnings, you're not supposed to swing trade a stock that has earnings for 3 days. And there's a reason we do that. There's a reason we abide by that. Okay? All right, another stock I'm keeping an eye on, folks, is Ren, R-E-N-N. The reason why I'm keeping an eye on Ren is because this is a sympathy play to Facebook and Baidu. It's the Chinese Facebook. So Baidu's a Chinese company up big on earnings. Ren is a Facebook type social network in China. So my thought process is, listen, I mean, it's up a little bit, but this could consolidate above these moving averages here and actually start to move up. So keep an eye on that. It's not performing that well today by any stretch, but I do think it has potential over the next couple weeks to month or so, assuming Facebook continues to stay strong and the market doesn't really collapse across the board. Okay? So that's something interesting to keep in mind. Let me see what else we have. Chevron's up about $1. It was down about $1 yesterday, so it's really regaining that. That's a nice move on Chevron here. Chevron continues to be a high flyer. Very impressive move today. While Exxon is actually down today, so it's kind of an interesting little divergence there between those two stocks. If we take a look at oil today, the USO is flat to positive, up 10 cents. Was down into the 20 and got a little bit of a bounce, but came back. Came back and so such. All right. All right, let's see what we have here, folks. I'm just scanning through anything else. JPM's weak today, so that's kind of interesting that that's lagging the market. Granted, it's off its lows, but it's still definitely lagging the market, so that's warranting a little bit of caution just based on that. Let's go back to the spiders. Spiders are just holding on to these moving averages. If you get below on a closing basis here intraday, this stock market could easily see the lows of the day. I still think there's weakness everywhere just based on the fact that the good news has come out in terms of earnings, in terms of even economic news has been decent, like home sales yesterday, and it's not helping the markets. So it tells me that again, just be wary, guys. I think that's smart, and yeah, that's it. Just be careful, be aware of it, take it for what it's worth. I've accumulated a few shorts over the last week or so, and I intend to accumulate a few more unless we see different signals coming out. All right, guys, take care. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial, and we will talk to you soon.